Today, I wish to consider the introductory theory concept for a chapter of Goodwill. Theory, Goodwill and its valuation. Observe the screen. In course of time, partnership firm not only generates annual profits but also creates reputation and more profit earning potential for future. The valuation of this is known as valuation of goodwill. So valuation of goodwill is based on profit earning potential of the existing firm which has a long standing. Now see, goodwill is a value of profit earning potential, value of reputation. Profit earning potential, reputation are intangible phenomena. So valuation of goodwill is based on this. So goodwill is an intangible asset. Just also, in simple words, goodwill is an intangible asset. Intangible asset means, intangible means beyond your five senses. The five senses that you hold: eyes to see, nose to smell, ears to listen, tongue to taste, and hands or skin to touch. Now goodwill cannot be seen. No sound of goodwill can ever be heard. You can't have a taste of goodwill on your tongue. You can't have a smell of goodwill through your nose. Thus it is just above five senses. As it is above five senses, it is tangible. It is intangible. Now goodwill is an asset. Why it's an asset? Because one of the characteristics of asset that every asset has a income generating potential. Suppose that if you have got a building or a flat, if you let it out, you earn the rent. So rent is generated by an asset known as flat. So assets have earning potential. And here there is an earning potential of an existing business with long standing. And that too, that earning potential is more than normal. So that earning potential, income generation ability of a reputation, that shows that there exists some asset. So by presumption, by the consequence, we estimate the existence of the cause, and that cause is known as goodwill, identified with the word goodwill. Goodwill arises out of the reputation of the business. Goodwill is the value of reputation of a firm with respect to profit expected in future over and above the normal rate of profit earned by similar firms in the same locality. Suppose that, say for example, one firm is there with long standing, say Wagh Bagricha, it has got a long standing reputation. Now its profit earning potential is more than other such firms. So this excessive profit earning potential is the criteria, the basis on which the valuation of goodwill is made. Only the successful business generates goodwill. The firm which has more profit earning capacity than the average of all other firms of the same group will have a goodwill that may be due to either its own image, due to spatial relationship, or due to some other reasons. Thus the valuation of goodwill is based upon the earning capacity of the firm. This is one criteria with which goodwill concept is explained. The another way to say about goodwill is, The goodwill can be defined as the difference in value between the net assets of the business sold separately and the sale price of the whole business. Suppose that in business there are 10 assets and 3 liabilities. If all 10 assets are realized individually and 3 liabilities are paid, what is the amount left with you? And instead of doing that, if you sell the entire business to one person at a stretch, then the price that you get on sale of business is more than individual realization of net assets. That excess amount realized is known as goodwill. This is also another way to explain the concept of goodwill. And this is more relevant and more predominant in practical life for accounting of goodwill. Now I want to consider the factors affecting the valuation of goodwill. Now see, why a particular firm has more profit earning potential? This is the list of reasons because of which more profit earning potential is noticed. 1. Business location. If your business is located at the center of the marketplace, the footfall of the customer is more, you have got a more chance to earn profit because of the location of the business. The another reason, period of business. If you have got a standing in a business for 7 years and the another business has a standing of 2 years, the business with 7 years standing has more profit earning potential as compared to business with 2 years profit earning potential, because the experience, acquaintances gained by that business with long standing is much more and important, and that's why more profit earning potential is found. So period of business is also one of the criteria for the purpose of valuation of goodwill. Nature of business. The business may be for luxury item, maybe items of comforts, maybe items of consumable items, maybe items of necessity. On the basis of the nature of the business, goodwill valuation is done. Generally, we find more competition for necessities. We find still less competition for comforts, like that. So on the basis of nature of business, goodwill valuation is done. Competitiveness of the business. If the business has a competitive advantage over others, or the number of competitors are less, the number of suppliers are just numbered, and the market share of the business is considerably more than the other, then the valuation of goodwill is more. Skill and proficiency of individuals. See, always skill and the proficiency of any business in all the business activities, may be operating, financing, investing, all are the activities of the business. If the business has got more proficient and skilled professional for the operating activities of the business, the skill and proficient individuals are there for the purpose of financing activity of the business, and skilled individuals are there for the investing activities of the business, then that skill and the proficiency generates a advantageous profit as compared to others, and that is also one of the criteria for valuation of goodwill. So skill and proficiency is required for the purpose of activities of the business. And which are the 3 main activities of the business? Operating activity, financing activity, and investing activity. And if there is a specialized skill and proficiency for the purpose of these activities, it will definitely generate more profit over a period of time. Other special benefits. Say for example the patent, copyright. They are the special benefits that you have achieved that gives you a competitive advantage. Because of that, the value of goodwill will be more, because more profit earning potentials are found because of such special benefits. Good relations with customer. Now certain businesses are operated in such a nice fashion that they always keep on customers. They give more value to the customers. They respect the feelings, expectations of the customers. Naturally, they can fetch more profit because they have got more ability to satisfy the needs of the customer. Development of reputation for purity and service. Now, purity and service. If you purchase milk that of Amul, it has got a standard, consistent taste, quality, and purity. So quality and purity assurance is very significant for the purpose of pricing the product, because the firm which assures purity and the quality of the goods, they can charge more price than the others, which generates additional profit to them. So assurance of purity, quality, that fetches more profit to the firm, so the value of goodwill of such concern will be more. The specialized skills of marketing, production, distribution of the goods and services produced, the specialized skills for production of goods, the specialized skill for marketing of the goods, the specialized skill for distribution of the goods and services, all this generates additional profit as compared to the other competitors. So all these factors influence the earning potential of the business. So these are the factors considered for valuation of goodwill. Next, methods for valuation of goodwill. Just observe. We have studied the factors affecting the valuation of goodwill. That's fine. The real value of goodwill is always as agreed by parties to the transaction, considering and assigning different importance to various known or unknown factors affecting the earning capacity of the business. Now, what is the value of goodwill? As agreed by the parties. Parties to the transaction comes to an agreement that this is the value of goodwill, that is the right value. How this value is arrived at? By taking into consideration the various factors influencing the goodwill, and those factors are known to both the parties, or maybe unknown to some of the party. That matters little, but value of goodwill is always the value agreed between the parties. That's the real substance of the valuation of goodwill. But we are going to consider the theoretical aspect for valuation of goodwill. Now let us study the various methods for valuation of goodwill. As discussed earlier, the value of goodwill is based upon the future earning capacity of the firm. So the traditional, customized academic criteria for valuation of goodwill, that has to be based on the future profit earning potential of the business. So the future profit, maintainable profit, is a significant factor for valuation of goodwill. On the basis of this factor, the valuation of goodwill can be categorized in the following methods. So we are going to describe 4 methods for valuation of goodwill. Methods of purchase of simple average profit of certain number of years. Method of purchase of weighted average profit for certain number of years. Capitalization of average profit method. Methods of purchase of super profit for certain number of years. We are going to discuss these 4 methods for valuation of goodwill. Now let us start. Before we start, I would like to say you that the valuation and the accounting of goodwill is necessary at admission of a partner, at the time of retirement or death of a partner, or for a change in the profit sharing ratio between the partners. And the valuation of goodwill is also more important when you are out to sell the entire business. Next, now let us consider these 4 methods. Method of purchase of simple average profit for certain number of years. Now let us discuss the steps for that. This is a very simple, popular method for valuation of goodwill. In this method, what is being done? Observe first step. Future annual maintainable profit is multiplied with the number of years for which it is likely to be maintained. So for this, you are required to first find out the future maintainable profit. Suppose that I am the partner in a partnership firm. I want to find out the future profit earning potential of my firm. What should I do? I should go to the astrologer, give the horoscope, and then I should ask, how much profit will I earn in next 3 or 4 years? Is it the method to find out the profit for future? No. Of course. So many may be going for such things, but that is not the recognized methods. So future maintainable profit is to be found out. After you find it out, suppose, then you have to multiply with number of years during which you are going to fetch that profit, you are going to earn that profit. So this is the valuation criteria. Now this future maintainable profit is a matter of estimate and opinions. How much will be the future maintainable profit is a matter of estimate and opinions. But remember, these estimates are based on the profits of the firm in recent past and under the presumption that the history will repeat in future. Now the future maintainable profit is to be estimated. For that we have to form an opinion. What is the basis on which you can form this opinion? The basis on which the opinion for future maintainable profit can be formed is the performance in the recent past. So these estimates are based on the profits of the firm in the recent past and under the presumption that history will repeat. Whatever the past performance that was noticed that is likely to be repeated in future, that is the basis for the purpose of estimation of future maintainable profit. It is because of this the profit in past few years is averaged and adjusted for any expected future change. Now to find out the future maintainable profit, consider the profit of recent past 3 years, 4 years, 5 years. Find the average of that profit, and that average profit is to be evaluated in light of certain future changes likely to occur. Now when you want to work out this average profit, you should take care of few things. The errors in calculation of profit in past should be removed. The effect of abnormal gain and loss in working out the profit for past should be removed. Non-business income and expenses which are considered in the calculation of profit in past should be removed. All these adjustments are to be taken care of, and you should find out the normal profit of the business under normal condition in past, and this average profit is to be evaluated in light of changes which is going to be or which is more probable in future. Now the future maintainable profit is worked out on this basis. That profit is multiplied with the number of years during which it is going to last with the firm. It is going to be earned by the firm. This is how the valuation of goodwill is made. The certain numbers of years of purchase of average profit method has two main limitations. One, method does not consider the increase or decreasing trend in the profit. Under this method, the valuation of goodwill is based on exclusively on the profit, and the consideration of capital employed in the net assets of the business is completely ignored. So these are the two limitations, and this is how the goodwill is worked out on the basis of simple average of past profit, which is presumed to be a future maintainable profit. Now let us go to the second method. Method of purchase of weighted average profit for certain number of years. Now we know that the simple average method, the trend of profit is completely neglected. The certain numbers of years of purchase of weighted average profit is utilized to overcome this limitation. Suppose that there was an increasing trend in past, that trend should be considered. How to consider the trend? Instead of working out the simple average, find the weighted average. Now, in this method, what is being done? If there is an if there exists a clear increasing trend in profit, weighted average method of profit is applied. Weights are assigned to the profit for giving more importance to the recent past, more importance to the recent past than the earlier past. This is how the weights are to be given. To explain this concept, let me take one illustration. From the following information, calculate the value of goodwill on the basis of 3 years purchase of average profit of last 4 years. See, this is the profit details. 2003, 4, 5, 6 years. 10,000, 12,000, 15,000, 20,000 is the profit given to you. Notice that profit has an increasing trend. So we should work out the weighted average method to find out the value of goodwill. Let me do that. Let me write down the profit for all the 4 years. 2003, 2004, 2005, 2006. This is the profit that I have written. Now I want to find out the weighted average profit. So I will give more importance, more weight to the recent past. Recent past is 2006. So weights are given. Weight 4 is given to 20,000. Weight 3 is given to 15,000. Weight 2 is given to 12,000. Weight 1 is given to 10,000. So the recent past is given more weight and less weight, less importance is given to the late past. So this is how weights are given. 4, 3, 2, 1. This is how the weights are. Now to find out the weighted average profit, this profit is to be multiplied with this importance. So 10 ones are 10,000, 12 twos are 24, 15 threes are 45, 24s are 80,000. This is my weighted profit. Let me have the total of weights, that is 10. This total works out to be 1,59,000. Now I want to find out the weighted average profit is equal to weighted profit divided by weights. So 1,59,000 divided by 10, 15,900 is the weighted average profit. Now this is the weighted average profit where I have given more importance to the recent past as compared to the importance given to the late past. Now I want to find out the value of goodwill is equal to weighted average profit multiplied by number of years of purchase. So 15,900 multiplied by 3 years. On the basis of 3 years of purchase, because this profit is likely to be maintained in next 3 years. So it has been multiplied by 3. So here the value of goodwill worked out to be 47,700. This is how weighted average method is applied for the purpose of finding out the profit. Now let me consider the third method. Capitalization of average profit. This is a third method for valuation of goodwill that I want to explain. Observe. We have studied that the weighted average profit method considers the trends of the profit but ignores the inclusion of capital employed of the business. To eliminate this drawback, the weighted average profit method, the capitalization of average profit method is to be used. Now see, we have considered the trend but we have not considered so far the capital employed. So this method considers or takes into consideration the capital employed for the purpose of valuation of goodwill. The following steps are followed for working out the goodwill by capitalization of average profit method. Now I just describe the step. 1. Identify average profit earned by existing partnership firm in past few years and is adjusted for any expected future change, that is future annual maintainable profit. So in the first step, you are required to find out future annual maintainable profit. That future maintainable profit is to be worked out on the basis of recent past. And the recent past, how to consider the recent past? Find the profit of recent past, find its average. And that average is to be modified, changed in light of certain future assured changes. And this is a future maintainable profit of the existing firm gets worked out. Next. Determine the normal expected rate of return of similar firms in the industry. Now there are so many firms in the industry. How much or what is the expected return for them? So expected return of the industry, expected return of other firms in the same business is to be found out. Identify the capital employed by the partnership firm. Now how much is the capital employed in my partnership firm? That is the third thing. So first I should have future maintainable profit. Second, I should have the information about the expected rate of return in the industry of the other firms who are in competition with me. I want to find out the capital employed in my partnership firm. Fourth step. Find capitalized profit using the following formula. Now, this is the average profit, future maintainable profit, and this is the expected rate of return. So capitalized profit is equal to average profit divided by expected rate of return. Suppose My average future maintainable profit is 1 lakh. The expected rate of return is 10%. So 1 lakh divided by 10%. So my capitalized profit works out to be 10 lakhs. 1 lakh divided by 10%, it amounts to 10 lakhs. So this is how the capitalized value of future maintainable profit is worked out on the basis of expected rate of return. Now, find out the value of goodwill. Now I have worked out the capitalized value. How much? 10 lakhs. 1 lakh is the future maintainable profit. 10% is the expected rate of return. 1 lakh divided by 10%. 10 lakhs is the capitalized profit. Now actual capital employed in my business as per point number 3 is suppose 8 lakhs. So what is the value of goodwill? This capitalized profit 10 lakhs minus actual capital employed 8 lakhs. 2 lakhs is the value of goodwill. So capitalized profit minus capital employed. This is how goodwill is being found out. So I have explained the steps for the purpose of working out the goodwill on the basis of capitalization of future maintainable profit. Capitalization has to be done on the basis of expected rate of return, and the capitalized value is to be compared with actual capital employed. The excess of capitalized value over the capital employed in the existing firm gives you the value of goodwill. Next, method of purchase of super profit for certain number of years. Just observe on the screen. We have studied earlier that firm which earns more profit than the average profit made by the similar firms in the same business is said to have goodwill. So the value of goodwill is determined with the additional earning ability of the firm than the average of all firms. So this method prescribes that goodwill is based on the super profit. Super profit is excess profit earning potential of the existing firm as compared to the average profit earning potential of other firms in the industry. Following steps are followed for working out the goodwill by certain number of years of purchase of super profit. Now I describe the steps. First, identify capital employed by the partnership firm. So first you have to find out the capital employed. Identify the average profit earned by the existing partnership firm in the past few years. For this, refer to the average profit calculation described in the third method. In the previous method, I have described how to find out the average profit. The same average profit description explanation stands as it is in this method. Determination of expected rate of return for a similar firm in the industry. That is also explained to you. Apply expected rate of return to the capital employed for availing normal profits. Now this expected rate of return is to be multiplied with this capital employed, so you will get the normal profits. So at the rate of normal expected rate of return, how much profit my firm should generate as against how much future profit potential I project. The excess of average profit means future profit earning potential of my business over the normal profit that has been worked out in point number 4. That is known as super profit. So super profit is what? Excess of average profit over normal profit. This is average profit, this is normal profit. Normal profit is explained in point number 4. Average profit is explained in point number 2. So average profit minus normal profit is known as super profit. Now, for finding out the value of goodwill, this super profit worked out in point number 5 is to be multiplied by the number of years of purchase, that is period during which the super profit is expected to be maintained. So this super profit is to be multiplied with the number of years of purchase, that is the during which this profit is likely to be maintained, so you will get the value of goodwill. So super profit multiplied by number of years of purchase is the value of goodwill. This is how goodwill is worked out under this 4th method. Now I have tried to explain the concept of goodwill and the various methods for valuation of goodwill. I feel that you have followed all these things. Thanks to all of you.